Hello, students. So, this is me. My name is Johann Peterson. I am going to help you at accountancy for the session 25-26. I run a coaching institute here at Jaipur. This is Essential Tutorials. It's on Gandhi Path West in Jaipur. In my course that I'll be covering for you, we will be covering the CBSE syllabus, and we will divide our course into 3 parts. So we will be doing first the essentials, which I will call. After that, we will classify things. Maybe some things while we are learning, we'll find them beyond the basics. And still furthermore, we will come on to some advanced techniques. So this will be our session that we will be starting, and we will be following one of the books by Professor D.K. Goyal for accountancy. So I welcome you all. Let us begin the first chapter, which we will start from book 1. We must know we have 3 books, and the first book is about partnership. So, the first chapter, this is accounting for partnership firms, the fundamentals. Let's understand what is partnership. So, when I ask what is partnership, partnership is basically the coming together of 2 or more people in business with the aim of earning profit. And carrying on the business together, or some partners acting on behalf of all. So, this is the definition of partnership, and we can remember the definition along with the section. So, it is section 4 of the Indian Partnership Act 1932, which defines partnership. So this section must be remembered. This is of the Indian Partnership Act of 1932. So it's basically the coming together of people. For doing business. Now, when I say we are doing business, we must have learned or understood what business is in class 11. A business is an activity which is carried on for the purpose of earning profit on a daily basis or on a regular basis. It's not something which happens once in a way. So this must be kept in mind. With the aim of earning profit and carrying on the business together, or some partners acting on behalf of the others. That's what is mentioned. So at times you may have all partners taking part in the partnership, or you may have few partners running the whole partnership business on behalf of the others. Now let's write down some features of partnership. As we have just seen, few things in the definition itself. So, the first feature, it is an agreement. So, what does then agreement mean? This means that a partnership is formed only when some agreement is made, when people agree. It cannot be formed just by few people by default. I mean to say, like you have a family business, and if you are born in that family, you yourself will be a part of that family business. But a partnership is not formed in that way. It has to deliberately be formed. And how is it formed? It is formed through an agreement. It is an agreement. So, this agreement can either be verbal or in writing. So, there always has to be an agreement. It doesn't form by default. And this can be either verbally spoken or verbally agreed upon or given in writing, and then their signatures of these people who want to be in partnership is taken on. The second, members. So, who are the members in partnership? The members in partnership are all those people who want to be in this business together. So, the members has got to be at least two. So, at least two members and a maximum of 50. Now, this number of 50, this was given in the miscellaneous rules 2014 of the Companies Act. Okay, so this maximum number was decided a year later after this partnership was formed. This partnership kind of business was formed. Third, there exists a mutual agency. Now, when we say mutual agency, it means this means a partner is able to act as a principal as well as an agent. Now, what does a principal and an agent mean? Sometime back when we were just discussing about the definition, we said a partner at times he behaves as if he's running the business alone, or he behaves as if he's running the business with other partners. So that's when this agency or this mutual agency category or this classification comes into being. So we can say that he acts as a principal and an agent in this case. So he is an agent when he is doing work on behalf of other partners. And he is a principal when he gets others to work on behalf of him. Okay. The next, there is no separate existence. That means the partnership and the partner are equal. This is to say that any kind of liability of the partnership will also be a liability of the partner. That means if people are in partnership and the partnership firm has some kind of creditors whom they have to pay off, these creditors, if they are not paid money by this business, they will ask for the money from the partners. Okay, another feature, the fifth feature, sharing of profits. So partnership is formed on a certain basis. In this, we assume that partners will be sharing profits. As we saw in the definition, they come together in business. One of the purpose of business is to divide the profits, which also means to, by default, share losses. However, there can be some partners who do not share losses. Okay. Now, in what ratio it is going to be divided into? Are they going to get equal profits all the time? This is written down at some place. We'll come to that. That is in something which is called a partnership deed. So the next topic is a partnership deed. So just like some time back we said, a partnership is an agreement. Now this agreement, if it is written down, that is called a partnership deed. So this partnership deed contains certain items which are to be mentioned in it. For example, we will just think what should be mentioned in a partnership deed. So the first thing is the name of the partners What else? The address of the partner. What else can be there? You will have the amount of capital brought in by each partner. You will have the ratio of profits or losses mentioned. So these are few things which will be definitely mentioned in the partnership deed. Next, let's come on to what are the rights of a partner. What is a partner capable of doing in a partnership business? So, what do you think a partner is capable of doing in a business? The first and foremost right which I get in my mind is to inspect the books of accounts. The second is to be consulted in the matters of the business. A third, to be indemnified for expenses borne by him or her for the business. This means he can inspect the books of accounts at any time. Whatever has been written in the books of accounts, if he wants to, he can take a look at it. He can be consulted in the matters of the business. He has to be a person who is consulted in taking business decisions. The third is to be indemnified. Indemnify means to be paid up, to be brought back to the position this partner was initially in. And that is done when suppose he or her they pay for some expense of the business. So if the partner himself is paying for the business, then the business is liable to pay back the partner. So that's what this third point means. The fourth is to disallow admission of a new partner. This is very common to know. Any partner can disallow an admission of a new partner in a business. It's not necessary that every partner can enter into a business, into a partnership business, without the consent of the existing partners. So the existing partners all have to agree. There cannot be even one or two of them saying, no, this person shouldn't be admitted, and yet that person is admitted in the partnership business. So any partner can disallow admission of a new partner. Another point, to be jointly owning property of the business. So this means every partner can jointly be said as an owner of the property that the business is having. Okay. So these are few rights of a partner. Now we'll talk about some liabilities of a partner. So what are the liabilities that a partner has? The first liability is in case this partner is doing a similar business. So let's say he has the liability to pay to the partnership business any kind of profit made if, that is to say, to pay to the partnership business any kind of profit made if he is running a business in competition to the partnership firm. So, what is this saying? It's saying this person or this partner, any partner for that matter, has a liability to pay to the partnership business any kind of profit made if he is running a business in competition to the partnership firm. So, if there is a partnership firm and I am a partner in that firm, also, along with me being a partner in the firm, I run my own business, which is competing with this same partnership business. Say we both are manufacturing bags. I'm a person who's doing my own business of manufacturing bags, and my partnership business is also of manufacturing bags. Now, in this case, the business is common, the product is common. And if I make a profit much more or any kind of profit through this business of mine, I am supposed to give back this profit to the partnership. The second, to give back the partnership business any kind of income that the partner has earned in his own business because he used some resources or assets of the partnership business. This means I am supposed to give back any kind of income that I receive if I have used my business, my partnership business's resources or the assets to earn that income. For example, let's say I have earned commission in my own business, which I was running. I earned commission, and this commission was earned on selling goods. Maybe these goods, which I sold, for selling those goods or for making those goods, I used resources of my partnership business. Now, this kind of an income which I've earned, this commission will have to be given to the partnership business. Okay. All right. So these are few things in general of what a partnership business is, what are its features. Let's also talk about who cannot be a partner. So there are few categories of people who cannot be a partner. The first is a minor. Minor is any person who's below the age of 18. The second is a person of unsound mind. And the third is a person disqualified by law. So, what do these three mean? The first one is simple to understand. Any person or any child who has not turned 18 years cannot be a partner in a business. There is an exception to it. There is, if the partnership business is wanting to keep such a person for some benefit, they can agree to it and they can have it mentioned in their partnership deed. The second is a person of unsound mind. That means he is not mentally stable. So those people cannot be partners in any partnership business. The third is a person disqualified by law. When I say disqualified by law, this means that maybe this person is in prison for some act which he must have done. So such people who were disqualified or were put under prison, these people would not be permitted to be partners in a business. Next, let's talk about some kinds of expenses in our business. So we have certain expenses in our business, which we have learned in class 11, which we can think to be expenses when we talk about the profit and loss account. So expenses like electricity bill, we can have rent, we can have any kind of maybe a salary that we are paying, salary to employees. These are all some expenses. Now, these expenses, we must know we have to pay them. Have to pay. Can I have my business running without paying an electricity bill? I don't think it is possible. Can I have my business running without paying rent? Again, I would say no. Similarly, even my employees would have to be paid salaries. I can't run my business without paying them salaries. So these have to be paid. We have to pay them. We cannot escape from these kinds of expenses. These definitely have to be paid. So these things I'm going to say these are going to be known as some new term, just a little different way of calling them. They're going to be called charge against profits. Now, why will they be a charge against profits? Because due to these expenses, my profits in turn would be less to distribute among my owner, my partners, in case of partnership business. So, when we make a P&L account, let's try and remember what we have done in class 11. In class 11, we made something like this P&L account. We had a debit, we had a credit aspect. On the debit side, we wrote these kinds of expenses. So we wrote whatever expenses here to maybe salary, to rent. So I am saying these are going to be known as my charge against profits. After this, what used to happen? After this, let's say we wrote a few. After this, we had some kind of a balance which was left in this account. When we spoke of the balance, we said it could either be left on the debit side over here, or it would be left on the credit side, which would be on the side. So when it was left on the debit side, we would call this a net profit. So we would write net profit, whatever may be the amount, and we would close this account. Similarly, on the credit side, if it came, we would write by net loss, and we would close this account. Now, what we have to do in class 12, that was what we have done in class 11. In class 12, things slightly change because we are studying partnership business. And in partnership, we have to take this amount which we got in the previous profit and loss account into a new account. So we're going to take this net profit from here. We're going to take this net profit from here. And we're going to make a new account. So if this amount is taken from here and put into a new account, let's say I'm going to call this new account a P&L Appropriation account. So if it is to be brought into this account, it will definitely come on which side? It will come on the credit side. Something going from one account into another account will come on the credit side. So I'm going to write this here. When I write this here, I'm going to write it as by net profit. And I'm going to put this amount here. Now, what is the point that I'm trying to convey? The point is that these expenses, as I told you some time back, these have to be paid. We have to pay them. So we had to pay our salary, we had to pay our rent. On paying this, when we were left with a profit, which was our net profit, we have something now which can be given to our partners, which is our net profit. But the partnership deed also contains certain things which we are mentioning in that as to what else we will be giving these partners during this business. So there can be some items which are going to be written and shown and which are going to reduce this amount of profit which we are given from our profit and loss account, which we brought into our profit and loss appropriation account. So let's say, for example, I had got a net profit in my previous profit and loss account of 10,000. Now, when I come into my profit and loss appropriation account, I am going to, first of all, give an amount which I've promised these partners, which are going to be known as my appropriations. So let's say the first item that I have promised these partners is to give them a salary. So the first item I'm going to write is to partners salary. Let's say I'm promising, let's say there are two partners, A and B, and out of them, I'm giving A a salary. So I'm writing two partners' salary. In brackets, I'll write A, and let's say I've promised him 5,000. Within the partnership deed, at the end of the year, I've written I'm going to pay A a salary of 5,000. So I've put that amount on the debit side in this account. The second, let's say I am going to promise in the partnership deed, I'm going to pay all of these partners commission. So partners commission. This is for both, so I'm not putting any name in brackets. I'm going to put in total, let's say, another 4,000. Okay. Now, there can be certain other items. For making things a little more diversified, I'll try and put a bigger amount here. So let's say I'm putting 1 lakh instead. I made a net profit in my business of 1 lakh. Then what else can come in this profit and loss appropriation account? What else can I give? A salary, commission. Then I can transfer some amount of this also to a reserve. So I will write to reserve. At times, after the net profit is calculated and before the actual profits are distributed to the partners, an amount is transferred to a reserve. Whichever may be the reserve, it will be mentioned. So let's say we are transferring 50,000 here. Okay. Now, while we were doing this, we also had written something in our partnership deed. Let's say that we are going to charge interest on drawings. So when we get interest on drawings, this is again an income for us. So this for our business, if it is an income, just like our expenses we were writing now on the debit side, this being our income, we will write this on our credit side. So I will write by interest on drawings. Let's say partner A has done drawings, and due to that, we have charged him interest. And let's say the interest has come out as 4,000. Okay. Now, we have also promised our partners we are going to give interest on the capitals. So, again, interest on capitals is given to partners. So, it will be going out of our business. So, I'm going to write to interest on capital. So, let's say in total to both the partners, we are giving 10,000. Now, we see on the credit side, we have a total of 1 lakh 4. And on the debit side, we have a total of 69. So 1 lakh 4 minus 69. If we do this, this gives us 35,000. So this 35,000 will now be written as something now which we are going to transfer to these partners. So for now, just write what I'm writing. Afterwards, we will understand why I've written it. So on the debit side, I'm going to write to profit transferred to the first thing. Since we know we have these two partners, A and B. So I'm going to write A's capital, and with a slash, I'm going to write current account. Again, B's capital slash current account. Now, how much is the balance which was left? 35,000. Let's assume these partners were sharing these profits equally. So 35,000's half is going to be 17,500. So I'm going to write 17,500 and 17,500. This in total closes my account, which is my P&L appropriation account. My total, as we saw, it was 1 lakh. I suppose it was 4,000. Yes. So 1 lakh 4 and 1 lakh 4. Now through this account, I wanted to explain what I've actually done here. We saw we transferred an amount from the profit and loss account to the profit and loss appropriation account. First of all, let's understand what is appropriation. By the word appropriation, we mean division. So we have broken down an amount which was of 1 lakh into smaller portions, which is 5,000, which is 4,000, which is 50,000. And also after you've added this 4,000 in it, this plus this, you have broken it down, and another amount was 10,000. And the balance, this balance amount you've written over here. This balance amount is called your divisible profit. This divisible profit is shown on the debit side of the P&L appropriation account. And if you understand this thing, that also means that these items which we have written here, these are all called your appropriations. Okay. Now, what is the significance of making this P&L appropriation account? What kind of an account is this? Just like a P&L account, this account is a nominal account. Why is it so? Because all my expenses over here, you see you have written all your expenses. Why is it an expense? And related to who are these expenses? That's also more important to understand. These expenses are related to the partner's expenses. So one is the partner's salary, one is the partner's commission. A reserve, you would not consider it as a partner's expense. This is something also which we write in this, which is an appropriation. Interest on capital, again a partner's expense. And then the balance which you're left, which is on the debit side, this is transferred to each of these partners in either the capital account or the current account. We will talk about this in one of our next topics. For now, just understand it's transferred into the capital or the current account of each of the partners. On the credit side, we had seen we brought a net profit. With that, we also showed another kind of income. So because this was a nominal account, that means on the credit side, we will have incomes. And this was our income here. This is our income. Okay. So this is something about the profit and loss appropriation account. Let's do a little distinction between the appropriations of profit and a charge against profit. So a charge against profit and an appropriation of profit. And a basis. So the basis, the first basis we can say its nature. So a charge against profit is an expense which has to be paid by the firm, that means the business firm, partnership business firm, even in case of loss. So a charge against profit, it's a very dangerous thing. It has to be paid whether the business is earning profit or incurring a loss, any of these cases. What about an appropriation of profit? Yes, this kind of appropriation, this is done only when the business makes profit. Second basis is the account in which it is written. So a charge against profit, as we saw, all the charges are written in the profit and loss account. The appropriation of profit is shown in the profit and loss appropriation account. Okay. So these few things we must keep in our mind on the basis of these two items. How do we differentiate between a charge against profit and an appropriation of profit? We'll talk about interest on capital. So why are we supposed to pay interest on the capital? See, at any point in time, there are two things which we are talking about. We are talking about the business, we are talking about the partners. Now, these partners, what are they giving to the business? These partners are giving capital. What is this capital for the business? This capital for the business is for the business, this is a liability. What is the business going to consider this capital to be? A liability. That means it has to pay it off back to the partners at a certain point in time. So let's say this partner has given the business capital. It is a liability for the business. But in the partnership deed, some items are mentioned. And among those items, it is also mentioned that the business is going to pay back these partners interest on this capital. So, what is the business going to pay back? Business is going to pay back to these partners interest on capital. Now, if I ask in terms of the business, what is this interest on capital? So, your answer would be this is an expense or this is an appropriation. What is this? We just saw some time back. We call this an appropriation. Okay. So this is an appropriation. It is in a way an expense, but it is an appropriation because we show this in the profit and loss appropriation account. Will this have to be paid in case the business is in a loss? No. Why? Because this is only paid when the business is in a profit. We just saw this also in our distinction between. Now, how do we calculate interest on capital? We'll just take a little example, a basic example to understand this. Let's say this business is started. This partner, let's keep his name A. This partner A has given 1 lakh to this business as capital. On which date? Let's say 1st of April. This is 25. Let's say during the year on 1st of July 25, he is withdrawing withdraw capital of how much? Let's say 50,000. And the year we know it ends on 31st of March 26. And my question is, if the partnership deed mentioned interest on capital at the rate of 10% is to be given, and the business, let's assume it earned enough of profits in order to give this. So how will we calculate interest on capital? How will we calculate? So the first thing we can see is we have given 1 lakh plus 50,000. In total, 1 lakh 50,000. Sorry, we have given 1 lakh and we have withdrawn 50,000. So at the end of the year, we are left with how much? 50,000 till year. So let's divide this whole year into two parts. Let's call this part one. Till the time he had given 1 lakh as capital. And this is the second part when we are going to consider the remaining leftover capital to solve the question. So my interest on capital for part one would be, how much capital have I given? 1 lakh. into the rate, that is 10 upon 100. For how many months is the business having 1 lakh of mine as capital? It's having it from April to June. 1st of July means till June it has had it. That means for 3 months. So for 3 months, how much is the interest? So into 3 upon 12. This would be 1 lakh's 10% is 10,000. 10,000 is for the whole year. So 1/4 of 10,000 means 2,500. So 2,500 will come here. So my interest on capital for this stage, this part 1 is 2,500. Now, interest on capital for part 2. Now let's consider part 2. I started by having only 50,000 as capital on 1st of July left with me. And at the end of the year, I still had 50,000. So 50,000 is the amount on which I'm going to calculate 10%. And I'm going to multiply it by, this is going to be 9 months, the remaining months of the year. So into 9 on 12, which comes out as, let's see, 50,000's 10% is 5,000 and 5,000's 3/4. So 3750. So for this it is 3750. Okay. So my total interest on capital would be the sum of both of them. So that is 3 and 2, 5. 5,000. No, 6,250, I guess. So my total interest on capital, 6,250. This will be my interest on capital. So therefore, if we look at this, how have we actually calculated our interest on capital? We look at the whole timeline. We looked at the whole timeline from the beginning of the year till the end of the year. So therefore, interest on capital, we can say that we are calculating it on the basis of time. All right. So we will continue. Till then, go through all that has been taught, understand, revert, do like it, do share it, and help out all your friends, and do subscribe to the channel. It is very motivating to see such kind of response when you get. So thank you and all the best.